What if I told you that a company just reported nearly 400% revenue growth in a single quarter, and that's not even the most impressive part of their story? Today, we're breaking down Pony AI's Q1 2026 earnings call, and there are 10 takeaways you need to hear. Whether you're an investor, a tech enthusiast, or just someone curious about the future of transportation, stick around, because this one is genuinely remarkable. Coming in at number 10, Pony AI's total revenues hit a record $34.3 million in Q1 2026, representing a staggering 145% increase year-over-year. That triple-digit growth was powered by every single one of their three business lines firing at once: Robotaxi, Robotruck, and Intelligent Solutions, which signals this isn't a one-trick pony, no pun intended. At number 9, the Intelligent Solutions segment, recently rebranded from licensing and applications, had a jaw-dropping quarter of its own. Autonomous domain controller shipments exploded by over 500% year-over-year, pushing the segment's revenue up 246% to $15.5 million. This shows Pony's technology is being adopted far beyond their own fleet. Number 8 is about the Robotruck business, which often gets overshadowed but deserves attention. Revenue here grew 31% year-over-year to $10.2 million, driven by long-haul expansion and a growing client base. And with their Gen 4 Robotruck heading to mass production in the second half of 2026 and a new L4 autonomous light truck already launched, the logistics opportunity is just getting started. At number 7, the financial narrative is quietly shifting in a very positive direction. Pony's operating loss margin narrowed dramatically from negative 401% a year ago down to negative 170% this quarter. Revenue is growing far faster than costs, and that's the kind of operating leverage that gets investors excited about the path to profitability. Number 6 is a milestone that doesn't get enough credit. Pony has achieved unit economics break-even in both Shenzhen and Guangzhou. That means the revenue generated per ride in those cities now covers the cost of operating it. This is the proof of concept that's attracting new joint deployment partners both domestically and internationally. At number 5, Pony's global footprint is expanding faster than most people realize. The company now has a presence in 9 countries and is offering public robotaxi services in 4 overseas markets: Croatia, Qatar, Singapore, and South Korea. Launching Europe's first commercial robotaxi service in Zagreb is a landmark moment for the entire autonomous driving industry. Number 4 is about bold target revisions that signal real confidence. Management raised their 2026 fleet target from 3,000 to over 3,500 vehicles and lifted their robotaxi revenue goal to 3.5 times the 2025 level. These aren't small tweaks, they're significant upward revisions made just 1 quarter into the year. At number 3, user adoption is accelerating at an extraordinary pace. Weekly average paid orders in May were already more than double what they were at the start of the year, and registered users in China grew over 200% year-over-year. Pony's Robotaxi has crossed a critical threshold. It's no longer a novelty. It's becoming a daily commute choice. Number 2 is the headline everyone noticed. Robotaxi revenue nearly quadrupled year-over-year, reaching $8.6 million in Q1 alone. Fare charging revenues surged over 46%, and demand remained strong even with pricing held above entry-level ride-hailing rates. That pricing power, combined with explosive volume growth, is a powerful combination. And the number 1 takeaway from this entire earnings call is Pony AI's foundational commitment to safety through a full-stack, redundant Level 4 architecture. Unlike competitors chasing shortcuts, Pony built their system from day 1 to operate without HD maps, without network dependency, and with fail-safe hardware at every level. That safety track record has earned deep trust from regulators and users alike, and it's the ultimate competitive moat that no one can quickly replicate. That's the real story here. A decade of rigorous engineering is finally paying off at scale.